Well, good morning, traders and investors. Today is February 22nd. It is let's see, is it the last week? Yeah, I think it's the last trading week of February. Let's see, Friday. Yeah, Sunday would be the 28th. So, yes, it is the last trading week of February. We've got a full boat for you today. We've got consumer confidence. Not today, this week, excuse me. Today we don't really have much, but we have a lot of stuff happening this week. We've got the GDP, we've got the durable goods, we've got the jobless claims, and personal income. Those are the big reports, and we have the Fed speaking. Now, I'm not anticipating too much from the Fed other than they're still cautious about COVID, and they're going to keep short-term rates low. That's a big problem because long-term rates are, remember, these are bonds. Bonds are going down. Long-term rates are going up. Now, don't get all worked up over this. They're not skyrocketing. They're still, near historic lows. But just to show you, looks like they peaked out right around beginning of 2020, and long-term rates. Now remember, bonds and rates are inverse. So if bonds are going down, that means interest rates are going up. That means we could have possible inflation, especially if long-term rates continue moving higher. Now, the big report of this week is going to be GDP. This is going to tell us if the economy is expanding and is growing. Lately, the last retail sales report was very bullish. And the retail sales report gives us a good indication of how the GDP is going to do. Now, as you will see here, this GDP number is going to be all over the place. Look at this, 4%, 3.9 to 4.4. I'm hoping that it's going to be 4.1%, somewhere in that ballpark. If it's in that ballpark, then we'll be okay. That'll be up to expectations. The big problem I'm having, the biggest beef I'm having is this jobless claim. This jobless claim report is still in the 800,000s. If you look about a year back, it was in the 800,000s. The reason I think this report is very instrumental is it's not delayed. It's not a monthly report. It's a weekly report. And this report is based on data that came in on 2020. And it's telling us that huge amounts of people are still unemployed. And if people are unemployed, they can't spend money. And if people can't spend money, then the GDP cannot increase. So that is a big problem. So personal income is going to come out. That should be okay. Jobless claims is where my problem is, and the GDP. So it's going to be a big report. I think we're going to see a slowdown in trading action right around Wednesday before the GDP, which is typically happens when the Fed speaks. So expect some subdued trading action since most earnings are out of the way now. And you've got new home sales, and I think that's going to be stellar. Home sales, I think, are at a 14-year high right now. So I wouldn't focus too much on that. The big reports, again, are going to be the GDP, durable goods, personal income, and jobless claims. And that's coming out later in the week, and I'll give you a full update. And again, I'm praying to God, I'm hoping that the jobless claim report is going to start going down below the 700,000 level. Now, in terms of global economy, let's go to our global economy. Global shares are down. As you could see here, Dow's down about 200 points. NASDAQ is really down. We're going to be opening in about an hour and 6 minutes. Global shares mostly lower on Monday. Investors remain focused on the future of global economies badly hit by COVID and when and whether there'll be enough stimulus to fix it. Big and important. Japan began administrating vaccines for COVID last week. U.S. House of Representatives is likely to vote on Biden's proposed package by the end of this week. It would include $1,400 check to most Americans, which we desperately need, additional payments for children, which we desperately need, and billions of dollars in aid to state and local governments, which we desperately need. Now, in terms of the stock market today, I want to show you 3 stocks that I'm still remaining bullish on. And I believe, now this is why I want to show you these 3 stocks. It's actually really interesting what I'm seeing right now. But I'm actually seeing a lot of stocks that were rising during the initial stage of COVID. They're starting to spike back up, which I find kind of interesting. Because on one hand, we're starting to come out of this environment. But on the other hand, the same stocks are moving up. Let's go through them. First one is Chewy. Remember what they do, subscription pet food and pet services. Let me just go through the profile. Retailer, online pet retailer, 288% this year. People love their pets and they're spending money on pets. And look at this thing go. I mean, look at this trend. It's crazy. It's a smaller stock. It's been doing really well. It just made a swing high and it had 3 down days, and now it's about to come back up. I like the stock, and I like it at the current price level. Chewy. And again, if you look, let me show you. Let's go 2 years. Look at how the stock rose throughout the entire COVID. Pretty good, huh? And it's now hovering around new highs, and it's a small cap stock. Small caps, folks, that's where the money is. Fiverr. Remember Fiverr? When people, what did I say? People are working from home. They need gigs. They need jobs. Look at this thing. It's going nuts. And again, swing high, 2 down days, pull back to the upside once again. I like the stock, and I like it a lot. I think it's going to go higher. And what do they do? Online marketplace for selling goods and services. Market cap of $10 billion, not a big market cap. And Chewy has a market cap of $47 billion. These are not big companies. These are not Microsofts. They can go substantially higher. And finally, Crocs. Remember what I told you? There's 2 clothing companies that that I really like, and one of them was Lululemon, and the other one was Crocs. And look at this stock. Look at this thing. And I told you about this stock several months ago, so it looks like small cap stocks are coming back up. The same stocks that were hovering 6, 7, 8 months ago. And that's a very, very bullish sign. So that's 3 smaller stocks for you that should rally really hard if we continue doing exactly what we're doing, kind of treading water and going higher. Now, it's probably best to wait for a pullback on these stocks. Maybe not all the way, but on Chewy, you may want to wait. Actually, I think Chewy's almost ready, maybe like the 108, 107 level. Fiverr, let's look at Fiverr. That one's really just going crazy. I would wait on that one till we get to the 50-day moving average, maybe the 250 level. And on Crocs, I would also wait till about the 70, 71 level. But I really like these stocks. Now, before I let you guys go, I've got something really important for you. One former hedge fund trader is pulling back the curtain on a new trading method that only requires your attention in the stock market right before it closes. You see, from the time the markets open till about 3 p.m. Eastern time, Wall Street has the upper hand. But once 3 o'clock rolls around, the big funds on Wall Street start bleeding cash, which sends certain stocks crashing lower. Now, what I want you to do is I want to help you take advantage of these cash bleeds during Wall Street's weakest hour, and you can make huge returns the next morning when the market opens up again. Isn't it great? You get in before the close, right before the close, half hour before the close, whatnot, and you get out the next morning. You get in before the close, you get out the next morning. I love it. And you're not day trading, so you don't have any of that pesky day trading margin. And folks, the profit potential could be big. All you've got to do is click on the link below to learn this revolutionary new trading trick. You've got to check it out. Get in before the close, get out the next morning. Get in before the close, get out the next morning. What could be simpler than that? And it can give you potential for triple-digit gains. Make sure to like this video, subscribe to this channel, and if you're watching on YouTube, stay ahead of the market by being the first to be notified when we post our next video. And have a great week. We got a lot of stuff coming this week. Watch those small caps. Bye.